Chinese stocks and bonds have been sinking lately. Will that cause a problem for American equities too? Welcome to Trading Nation. I'm Eric Chemi, joined by Eddy Elfenbein of the Crossing Wall Street blog and Max Wolff of 55 Capital. Eddy, let's start with you. China, U.S., how are they related? What do you think traders need to do to get themselves positioned for these moves?
Well, the good news is China really does not have a big effect on our market. In fact, the big effect is us on them, and the Chinese market is trying to digest the news from the Federal Reserve this week. And the Chinese stock market it's for people who find the dog track a little bit too tepid and not so interesting. I'll give you an example. The Chinese stock market went up 150% in less than 12 months. At the same time, our market went up by about 6%. So we can really ignore what goes on in the Chinese market. It does not have a big effect on what we do and also in the Chinese bond market. Now, what could be an effect down the road is the Chinese real estate market, which is showing some signs of bubble. It has not popped yet, but that could be an issue as we head into 2017.
Max, do you think Eddy's right? Can we just ignore China completely? Is the U.S. really the driver here rather than China driving us?
Yeah, so we'd be more interested in looking at it from a macroeconomic perspective. Clearly, there's a divergence of policy on the interest rate level. So the U.S. is in the mode of finally normalizing or raising rates. The Chinese are looking at the possibility of having to go the other way. What is happening, though, is the Chinese are divesting, and I would urge people to take seriously the notion that China continues to own $3 trillion, that's $3,000 billion worth of U.S. assets. Their decisions around those assets, even if they begin in their domestic markets, have the kind of ramifications one would associate with a $3 trillion position. Additionally, China is the engine of global growth, the second largest economy in the world, 1.3 billion consumers. So I think we'd all agree that it's never a good idea to take your eyes completely off that. That being said, the internal market dynamics, we agree they're not one-to-one. What does seem to be causing some consternation vis-a-vis China is a notion of a new, more protectionist world. And as one of the larger surplus exporters on Earth, they seem particularly vulnerable, as well as they have their own domestic business cycle. We watch both of those very closely because they're a massive source of demand for the United States, and they are a major contributor to global growth, upon which 47% of U.S. S&P 500 earnings are based. So we will be watching this quite closely from a macro perspective.
And then I'll throw a jump ball for whoever wants to take it. Trump's coming into office soon, and some of the things he said about China, his phone call with Taiwan, do you think this is going to make an impact? Let's say these tariff rates go on. Whoever wants to jump in and say how this might affect U.S., China, these equities and bonds moving together.
So I'm sure we both have opinions. I mean, I would say one thing that Trump's moving away from TPIP and TPPIP also changed the balance of power in Asia. I think China sees itself as more powerful as against the United States and Asia. Asia is the source of incremental growth for most U.S. growth companies, so that's not a minor matter. Additionally, we think the United States and China will have less interest in being polite to one another, and so we'll see more direct competition around the world. And remember, global growth is still the story for growth largely, and no matter how much better we may be able to go in terms of GDP growth from this quarter to the next to beyond, 96% of the world's population and 80% of the world's GDP is non-U.S.
Eddy, I'll let you get the last word in there.
Yeah, I have to agree with that. China is really doesn't like to see us meddling around in the South China Sea, and they're very protective about that. And my fear is that things could escalate if we are not more diplomatic on that. But we have important interest to stand up in that part of the world. Things could get bad, but for now, I'm hopeful.
My thanks to Eddy and Max. Thanks for joining us here on Trading Nation. Have a good one.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.